Got the intro this morning.
No intro. That's okay. They get to see our pretty faces.
Good morning, everybody. Rendo with the Homes in Orlando team, joined as always by Joseph Dion. Hey, Joe. I guess you're feeling kind of like me this morning.
You know, it's just been this weather, the constant changes. Like it's hard to. It does a toll on the body, right? Like hot, cold, Florida, humid, wet, not
ear infection, and But thank you everyone for joining us. We are the Orlando Real Estate Buzz. We come to you every Thursday, bringing you all the national plus local economics so that you stay up to date on what's going on and what's affecting the real estate market. And the big one that came out yesterday that really kind of helped us out overall with the rates was the ADP numbers for national employment. They came in at 103,000, which was about 27,000 lower than had been expected. Mm-hmm. So that's a pretty good miss. That's what, about 18-20% off your number?
Yeah, right off. And that's when you see something like that, the funny part is I'm curious what's going to happen when they revise it. Does it get revised up, or does it get revised even lower? Because, typically what we've seen is that these numbers are revising to the downward.
Mm-hmm. Exactly. And the interesting thing that I saw in the numbers was down here in leisure and hospitality. Because what was driving all of our numbers throughout the summer, the spring and the summer?
Leisure and hospitality.
Leisure and hospitality. They were having 55,000 employment jumps, 40,000 employment jumps. Mm-hmm. And we've actually seen a contraction.
Yeah.
Which makes a lot of sense when you look at inflation-wise, that a lot of people are really starting to curtail extra spending because they went to the grocery store this week.
It's true though, right? Like it's true. Like, we've seen an adjustment. I think we've seen an adjustment. It was interesting to see kind of like Black Friday, Cyber Monday, some of the strongest shopping historically. But the question began, it's like what I talked a lot about with my team was, just because those numbers were strong doesn't mean that the economy is strong. A lot of times that could actually mean that the economy is a little bit worse because everybody was saving up, waiting for the deal. So they get their Christmas. What we need to see is, what does that spending look like the rest of this month? And I think it's going to be down across the month. Yep.
And what a lot of people don't look at as well is they don't adjust the number for inflation. So yeah, we may have had a 4% increase or a 5% increase, but if prices went up 8%, you really haven't had an increase. You actually decrease. And that's something, again, you got to look at the whole number, not just the headline. Mm-hmm. But overall, these numbers continue to be very good for the housing market. The headline last week though was, the lowest sales numbers since 2010 for housing, and a lot of that was due to the interest rate hikes. But when we look at where the market's been headed over the past couple days, this has really been beneficial, and we've seen it. Your average is probably on conventional about 7% right now, right in that ballpark.
7 and 8, right in that ballpark. Like, it's pretty cool to send quotes to people in the 6s again. Like, I'm not gonna lie.
Yep.
My job's a lot easier.
Your FHA is a little bit better than the conventional right now, correct?
Yep.
We got the announcement this week, that the conventional limit is going up again, to 766,000. But you kind of look at it like, well, you used to get excited when you'd see that limit push up, but right now it's like, who cares? Because I don't have anyone who can, afford to take out a $700,000 mortgage. My people are worried about the $300,000 to $400,000 and what their payment's going to be overall.
Yep.
I got a young man, and he's fortunate in that his godmother is in the mortgage industry, and she locked him in yesterday, because she's doing it at no cost at 6% for him. And it actually brought him below $2,000 with taxes and insurance on his payment. And he was just like ecstatic.
Yeah.
And it's, you feel great for him because he works hard. He's a HVAC tech, real nice kid. And anything we looked at, if we jumped, $5,000 on the price, it really took him out of his budget opportunity. So, this is where I think we're all kind of hoping that, can we pull back a little bit so we can get some people qualified again. I think you and I talked about it earlier, is the yields are dropping, but they're still being cautious on the mortgage side.
Yeah, I think we've seen the 10-year T, which is going to be one of the most conservative investment options out there. And MBS is typically pretty conservative as well, but we haven't seen kind of those returns the way that we wanted to see them. So usually that when you see that drop in the 10-year T, we see the MBS kind of go up, right? Like we see a corresponding adjustment. We kind of haven't seen the equal movement. And I think we're going to start to see it a little bit as a couple of days, but there's still a little bit of caution on the mortgage side when it comes to investors. And I think they're seeing a lot of the trends that we have right now of, home sales are down. We're seeing new build data coming in that's a little bit softer than what they want, and I think that's going to impact what happens on these mortgage-backed securities. And I think Powell said some things that maybe scared some people away on that too.
Yeah. Did you see him on Friday when he basically came out and said, guys, you're getting over your skis. You're getting ahead of yourself. We haven't said that we're done raising rates, and we're going to continue to look at it.
Yep.
And surprisingly, the market kind of just like, yeah, whatever, Jerome. Yeah, we think you're going to blink first. That's what we think. We think you're going to end up blinking first. And the market, you really can kind of see that they're the way they're looking at things is no, we don't really believe you. We think you're going to go ahead and cut rates. And when we get into the betting pool is right now, of course, the meeting coming up here on the 13th, everyone's like, nah, they're not doing anything. And probably not, especially with the job numbers we just got yesterday. The federal numbers come out tomorrow morning. So if those are soft again as well, I think that really, just takes any rate hike off the table. And we've also seen, besides the low new jobs, is that the number of job openings have actually dropped to the lowest it's been, than before the pandemic, where it's down to like 8.7 million. To me, seems like a ton of opportunity, but
seems like it, right? But that's lowest since before the pandemic.
Yeah. But you're not seeing it. But when we start getting in here, all of a sudden, if you remember last week, this was, no change in January, was at about 86-87%. All of a sudden, you're starting to see an inkling of more people feeling that January, they may actually do a cut. And then as we get further into the year, we get into March, and you now got over 60% of the people feel that March is our first cut. They're going to have to do a quarter percent rate decrease in March. And then when we get into May, you've got 87% of the people feel we're either going to have a quarter or a half a point or better rate cut. That's why everyone when Powell came out on Friday, which I thought he was very, very forceful, very vocal, and the market just said, whatever, Jerome.
And my concern with this is kind of Jerome's kind of leaning into this whole situation of, what I don't want to see is the Fed pull back too quick, and then us go back into a speculative buyer market, right? Like where all of a sudden we hyperdrive purchase, right? Inflation drives back up. And if we see that happen, the Feds are going to come back twice as hard, and they're going to let it sit and really make sure pain is felt. About back to the 80s when the Feds adjusted too quick. They said, oh crap, inflation skyrocketed again. Then they came back and put the pedal to the metal.
They doubled down hard.
And that's what I'm afraid we could see this time. So I don't want to see the Feds kind of jump in too. I would rather them be a beat too late right now than a beat too early. right?
Yeah.
Because I think if they're too early, it will drive, because we live in a hyper aggressive market to where we see it right here in the numbers. People aren't listening because they're like, oh, the data's pointing here, and they're getting ahead of themselves. And sometimes getting ahead of ourselves can drive prices back up, can drive purchase season, can drive inflation back. Like all of these things, these snap reactions can have a bigger impact on us.
Yep. But it's interesting because we had that conversation last week about the builders and what are the builders doing. And I went to a fantastic meeting, and we're going to cover those numbers next week of what's going on with the home builders here in Central Florida. But like I had mentioned, we get the updates every Thursday morning of available homes, and here it is. For your own eyes to see, is you had a home at $372,000. This is Taylor Morrison home. Okay, this is a 2-2, and they cut the price $47,000. That's over a 10% price cut, really pretty close to a 15% price cut on that home. And it's just not one. I mean, they're doing it consistently. Here you've got one at $899,000. They cut it $44,000. Come down here, you're seeing it again. $20,000 price cut. So that's anywhere from a 5 to a 15% price decrease on homes currently built by Taylor Morrison, and they're still going to give you the rate buy downs. This isn't the only one. I could pull up pretty much every builder right now and just show the incentives that they're providing for buyers. And this is one reason why we said, if you're looking at a new home, now is not a bad time. You can probably negotiate a price decrease, rate buy downs, plus some extras. That refrigerator that we love. I mean, when you look at those numbers, the new builds, which have been propping up home sales really in Central Florida for the past several months, I'm afraid that can pull down our prices. That's one thing that can actually start to pull down prices, because if you're looking at now, all of a sudden you're looking at $400,000, where it may have been $450,000 for that new construction at 7%, and you got a resale at $400,000 at 7%. Which way are you going to go? Majority of people are going to go towards the new construction. So how do you beat the new construction in the resale? You've got to lower your price to make it more attractive. And that's my worries, is because inventory has grown enough that we're seeing some of those price decreases, and we're seeing it in our numbers on a weekly basis. And then I think the other big news, and this came out yesterday, was we have been talking consistently about the commercial mortgage market, and that there's a lot of trouble ahead. And a lot of people may not know who Carson Block is, but he's a very big short sale guy. And he is actually shorting Blackstone's real estate investment trust right now. Reason being is they're holding all this commercial paper, and he feels they're going to have a liquidity crisis coming their way, because if they have to sell any of these properties, they're going to be taking huge losses on this commercial paper. And a lot of people don't know, but BlackRock froze the ability of its investors to pull their funds out of their real estate investment trust. And that's been over a year, maybe about a year and a half. They have not allowed you to pull your funds out of this account. So that's scaring me a little bit about how bad, if you've got one of the big short sellers of the world telling you one of the biggest public companies is in a world of hurt, and I'm going to short it because I think I can make a ton of money, that's got some big red flags being waved in front of it.
Yeah, that's a little concerning right there. And that's something where we talked about before. Like, we haven't seen the commercial side have the impact that I think a lot of people expected, right? Like when COVID happened and the work from home, like a lot of people expected commercial to take a big hit. And in certain areas, we've seen it already. But in Central Florida, we really haven't. For all intents and purposes, like we're negotiating a new leases right now because our lease is getting ready to go up. And there's not a lot of wiggle room, and I kind of joke because what I feel is happening is, a lot of these landlords and owners, they're trying, whereas we used to be able to negotiate a 3-year contract. I mean, everybody wants a 5-year in commercial, but for office space, you can usually get a 3-year with minimum build out and this and that. If we covered it, like nobody wants to do a 3-year. They're all like, we want 5-year, because I think they see what's going to happen. And I think they're starting to see it, but they haven't it hasn't happened to the point yet to where the people looking to rent or to purchase commercial are able to benefit. It's kind of like, okay, well, the people that hold the properties, they know it's coming, so they're trying to lock in people where they can.
If the market does slide, which I think again we've been very fortunate in Central Florida, where other parts of the country they've seen the commercial really start to slide tremendously. Probably the biggest, of course, is San Francisco. I mean, they just, went to hell in a handbasket very, very quickly. And, a lot of people turned over the keys to their commercial buildings and said, you know what, it's just not worth it. I still owe you $315 million. I've lost, 80% of my tenants. There's no way I can make this work. Here, take it. Have a nice day. That's something that we got to continue to watch, because we haven't seen a lot of follow-up news either on the WeWork fiasco, that bankruptcy. That's still in the process, and what's going to happen with all their leases as well. So those are things we're watching. And then when we break into our numbers here locally, we had a nice rebound this past week.
Okay.
So, the week before we were down to 190, which of course, that took into effect, the Thanksgiving, but we jumped back up to 391.
Yep.
But again, our inventory is continuing to grow, and we're actually up to 5,600 listings right now.
Oh, wow.
But our condos, that condo sales number is still staying low. We only have 138 sales in the condos, and our inventory is increasing there. And then when we look at, our all-important original list to sales price, we've stayed consistent week to week for the past several weeks, where we're sitting down around 94% of the original list price.
Yep.
And it's interesting because I was doing a home inspection yesterday, and a lady who's selling her house down the street stopped in, and we had a nice conversation. And I politely told her, well, my gut tells me you're high on your value. If you'd like me to, I can go ahead and do a quick analysis for you and just send it over to you, just so you have a reference point, to talk with the person you're working with. And I did it yesterday. They're listed at 400,000, and she's 25 grand overpriced. There's literally nothing within a half mile that supports the price that this person has put on the house, and she's got to sell this house to buy the next house from a builder, and she's got 2 months. And I'm like, not at that price. You're not. It's not gonna happen. Not with these interest rates. So I'm afraid that's what we're seeing a lot of times is people are getting aggressive. Actually, gentlemen we work with who I help out from time to time, John. He has a listing, and he really priced it it's a townhome.
Yeah.
And the townhomes were pretty much going, it was almost consistent, 260,000 in the facility, right? Most of them started at 265 and ended up at 260, like 3 of them in a row, like that. And he priced it at 269, and he wasn't getting any hits. I'm like, it sounds ridiculous, John, but you priced it wrong. You priced it too high. It's showing you right here, 265, 260, 265, 260, 265, 260. One went a little bit higher, but it actually had a lot of upgrades interiorly to the unit. And it's like people just, you got just a little bit too high. People just aren't going to look at them. Like, no, because we're going to wait. We're going to sit back and we're going to wait for these people to drop the price. And then what happens is the seller gets nervous, and they drop it more than if they had originally priced it correctly. they have to drop it more because now they're feeling insecure about the pricing on their units. Then we sit here and we look, week over week, we're averaging 386 overall. And I looked at last year's number, and we're about 50 units below difference in the period average.
Okay.
We were 436 last year. 50 units is pretty good, consistent number.
Yeah.
That's a pretty big spread overall.
Yeah. You're talking if we're at 436, that's it. 50 units that's approaching a 12.5% decline.
Yep. Then average days on market, we popped back up. I think a lot of that had to do with not only a holiday, but that jump in rates that we took last month. And our inventory is consistently growing. And this was something that I found, we usually don't look at this slide, but I wanted to put it in. And that's because of this. Active foreclosures. We're actually starting to see a jump in active foreclosures. We were sitting down, 20, 21, 25. We've almost doubled the active foreclosure sales from September, which again makes a lot of sense because the inflation that's gone on, not as many jobs available. We have seen some layoffs here locally. Yeah. So that's when you start to see that number, that active foreclosure number jump up. And another thing I've been doing with one of my investors is we've been looking at tax deed sales. And that's when someone's been owed, they bought the tax lien, it's been over 3 years, and now they're filing to take the property over. And in Volusia County, oh my gosh, there were 42 of them last week. I think there's 28 of them this week. And it's not a lot of money. It's like $1,500, I think, was on average what some of these people were going to lose their properties over. And that just kind of blew my mind a little bit. I didn't expect to see that.
Yeah.
Then we get into our condo market, and you see here we're still sitting about 95%. Days on market consistently 43, but this period average 129. We were over 200 a year ago.
Yeah.
So we've seen about close to over a 40% decrease in the number of condo sales in a year. Wow. That's tremendous. And the inventory continues to grow with it. And then this was don't have it, but the other one I was looking at is the number of withdrawn for condos shot through the roof the past week. It went from an average about 30 to I think it was 65 withdrawn. So people are like, I'm not having any luck selling this, so I'm just gonna withdraw it and continue to hold on to it. So the market's still soft, and if you're a buyer, take advantage of it. I just really think there's people who are sitting on the sidelines right now that don't realize that it could be a very, very good time to be a buyer.
Yep.
Home prices, I don't think, we may see a small pullback, but I really don't think with the number of homes, when you look at the data of people still moving here, that there's no space left to build, that the prices we're not going to see that pullback from the 2009s, 2010s.
Yep.
So take advantage of it now and work your deals, work them, make it be beneficial to you, because there's sellers out there who are nervous. Like the one I met the other day. My house has been on the market for 20 days and I'm not getting any hits on it. Why not? Well, first off, it's priced wrong. So walk in, put your numbers on the table. Hey, this is what it is. If it works, great. If it doesn't, okay.
Yep.
Not a big deal. We've got 5,600 homes, that we have an opportunity at. All right. Well, those are our numbers for the week. Thank you so much for joining us, and please like and subscribe, and we will see you again next Thursday. Take care, Joe.
You as well. Feel better.